We have our first guest for today. We have Godawari Power and Ispat on the back of Q2 numbers. We have Abhishek Agarwal, who's the ED at Godawari Power and Ispat, to talk to us about Q2. It's been a softish quarter, sir, in terms of execution because of plant shutdown and one-offs. Just talk to us about how it's played out. How has Q2 played out?
See, talk about the hiccups. I don't see as a hiccup because for two things. One is it was a planned shutdown. So usually the pellet plant operation, it is every 7 to 8 years, 10 years, we have to take an annual shutdown of almost 45 days. The last shutdown happened in 2013. So almost after 10 years. So it was a planned shutdown. That's why the pellet volumes are much lower compared to Q1. The production has resumed, end of August. And Q3 onwards, we are confident we will be able to achieve the given guidance in terms of pellet volume, because the pellet volume drives the major top line as well as the EBITDA for Godawari. So that is one. Second is, of course, mining is on the lower side again because of heavy monsoons. The monsoons have been very unusual this time compared to previous years. But we are confident even in the mining volume, we'll be able to catch up in Q3 and Q4.
Good afternoon, Abhishek. Mihika this side. In terms of your realizations, like there has been pricing pressure all across the board, but in terms of for the second half, how do you expect the realizations and the pricing outlook as a whole to pick up, especially for iron ore?
See, on the pellet pricing and the iron ore, it is still, I would say, not very low compared to the other steel, supply chain prices, because the iron ore supply into India and the demand of pellets is much strong compared to the export market. But usually Q2 is a weak season for steel because of monsoons. Once now Diwali is also over, and going forward November onwards, it's usually a peak period for steel consumption in India. So we are confident, Q3 and Q4 onwards, the prices should go up and the demand should come back.
Got it. Abhishek, I want to take a step back again. I want to try and understand whether pellet plant 1 has production commenced for you?
It has in August end. It's already almost more than 2 months now.
Okay.
So both the plants are running at full capacity.
So both plants running at full capacity. Q2 should be a clean quarter for you?
Q3, not Q2.
Apologies. Q3 should be a clean quarter for you?
Yes, it will be.
Okay. And iron ore production also resumed fully. So everything behind is my assumption here.
Yes, if compared to Q2, so the iron ore production in the mining side as well as the pellet production will be in line compared to our given guidance for Q3.
Got it, Abhishek. And in terms of your expansion plans, you have 7 projects underway. I want to first focus on the iron ore mining and the pellet plant, because these are the expansions that are relatively to be commissioned earlier, Q4 and Q1 of FY26. In terms of the outlook for FY26, once these expansions come into play, how would the trajectory for these two segments go going forward?
See, in terms of expansion, the pellet plant construction has already started, and we should be able to commission the plant by end of FY Q1, 26 Q1. So that is on track. For mining, there is a slight delay in terms of approval. Earlier, we had assumed we will get the approvals by end of Q3, early Q4 of this financial year. But now we have revised the guidance of iron ore mining as well. Hopefully, we should get the desired approvals by end of Q4. And for FY26, we should be able to ramp up the mining capacity in tandem with our pellet plant production as well.
All right. So for viewer context, Abhishek, give us perspective. How much of capacity gets added and how much will that contribute to top line?
See, for FY25, mining will be at about 2.35 levels. Yeah. Pellet production has given guidance about 2.4, 2.45. We will be able to achieve that. And any additional volume of mining or pellet will only happen in next financial year.
And in terms of the integrated steel plant, which is a large part of your future Capex plans, almost 6,000 crores, could you give us the update on that? And in terms of the long-term advantages that the steel plant would have, could you give us more insight on the same?
On the new 2 million steel plant, so we have already given a first presentation to MOEF, which is the last stage of getting the mantle clearance. And hopefully by end of Q3, early Q4, we should have the approvals in place. And once we have the desired approvals, we'll start the work at the ground level. Already parallel working is going on in terms of equipment supplier and stuff like that. So hopefully by early Q4, end of Q4, we should be able to start the groundwork.
And in terms of, I want to talk about the demand outlook as a whole. We have the China stimulus coming in. How is that? Are you seeing any green shoots in terms of demand for the company?
See, as I said, we are not in the export market anymore for last almost 9 months. The iron ore demand in India is quite strong, especially the iron ore pellet demand, because a lot of direct capacity has been added. So we are confident the pellet supply and the demand will remain strong going forward as well.
Your margins keep getting better. I want to try and understand where you expect margins to go over the medium term. Of course, this quarter, sort of an aberration, if I can call it. So where do you expect margins to lie on a normalized basis, say FY26?
See, if the market remains intact, and the annual demands remain strong, we should be able to, maintain the achieve, desired EBITDA, which we've been achieving last couple of years. So anything about 22%, we should be able to achieve given the current market scenario.
Right. And on top line growth, what's the guidance like? FY26, you have a new plant coming on stream. And you have very, very strong expansion plans as well, almost through this decade. What's the sense like? Where should your top line go to over the next 2 to 3 years?
See, for FY26, assuming the pellet production will commence, in end of Q1, so we can say a 50% production volume will be added, which is about 1 million ton. So when a price about say 10,000 rupees, so we can see an additional, 1,000 crores on the top line for FY26. See, the new steel plant of 2 million, it will start, commence production hopefully by, say end of FY28 or, early 29. So that's a long way to go. I say for FY26, the top line should be additional 1,000 crores on account of pellet production.
In terms of, you have captive mining and that provides you with an edge. In terms of the, benefits that it could have to your margins, what's the outlook on that?
See, currently we are able to, consume about 80% of our iron ore mining with increasing pellet production and increase in mining capacity. FY26, we expect 100% to be captive. Once that happens, we can, easily, maintain the current EBITDA levels in terms of pellet, which is about, 4 rupees on average for the yearly average.
And, you've increasingly gone downstream, higher up the value chain, which is clearly a positive. What plans, on a broader basis, what plans to go even more downstream in terms of other products as well as existing products? Is there a plan there?
So we got the approval for an enhanced DRI capacity, end of Q4 last year. That's why you can see in Q2, the sale of DRI in the open market is much higher because we will be able to produce additional 1 lakh ton compared to previous year. That is one reason. And on the downstream side, we have just commissioned a new structure cum strip mill in Ispat, which is, under trial stage. And, starting of Q4, we should be able to, achieve the desired production. So further, the value addition will happen from Q4 onwards.
In terms of your entire capacity utilizations, the FY24 capacity utilizations did range out. In terms of how you expect these utilization rates to close out for FY25, what's the outlook on that front?
See, we are almost operating 100% of capacities from last few years. And in current year as well, the guidance we've given, we will be able to achieve that for sure. In terms of DRI, 0.594 for steel making, 0.5 million, and for down rolling, about 0.4 million. So we should be able to achieve that going forward as well, in this year as well.
And, you have 7 expansion plans underway, but are there any other, sub-segments that, the company might feel that they need to work on more capacity expansion plans or more integrated plans could come into play?
No, as if now, I think once, already the Ispat mill has been commissioned, which is further value addition, parallelly the pellet plant, the mining and the new steel plant. So as if now the company have plans for these 3 projects at the moment going forward.
Got it. You've got around 7,000 crore odd of Capex lined up. I understand that a large chunk of that comes from your integrated steel plant, and that's, probably some time away at least. Just talk us through and you've guided that you will not take on more debt. All of this will be funded through internal accruals. Talk us through possible downside of that actually translating or not translating, if I can call it. Is it possible at all that you may have to actually take on debt at all? Is that possible?
See, it is possible depending on the current market scenario and when we are able to, start the new project. So we might, have to take some debt, on books. But even if we do, probably it will be much below, 0.5 compared to debt equity ratio. So we're very much comfortable at the moment. Depending on, when you have to infuse the money, we will take a decision then only. But at the moment, we're confident we should be able to achieve with our internal accrual. But given a chance, we might have to, we will take it. We have no issue in that.
Understood. And how quickly will the integrated steel plant begin? At least when do you expect environmental approval to come through? Is there a timeline in mind?
So end of Q3, early Q4 of this financial year, we should get the entire approval.
Okay.
And from there onwards, another 36 months. So we can say end of FY28 or early FY29, we should get the commercial production.
Okay, thank you so much, Mr. Agarwal. Always a pleasure speaking with you, breaking this down. Always a candid conversation with you. Thank you so much.
Likewise.